All right. Welcome back to another market recap and a look ahead. And I am so grateful that you have spent a bit of time with me today. So thank you very much. Right, I'm just going to get into it. But yeah, NASDAQ, S&P 500 and the Dow Jones, record highs. Again, last week, record highs. It's just record highs, and this is not going to be the last record high. This is just going to keep going up, and it's going to keep going up, and it's going to keep going up. So you are going to see more record highs coming our way, and I'll speak to all of that shortly. But if we go and have a look here, crude oil took a bit of a knock this week, but it bounced back terrifically, and it's sitting at 72. The Dixie did go on a bit of a rally. There was a bit of a strength in the Dixie, but it seems to have cooled off a bit now, hence why you're also seeing crude oil going up itself. However, gold is still taking a slight beating. It's sitting at 1,800 US dollars. However, it still remains suppressed. So just a quick look now, what is actually going to be coming this week and how I've positioned myself and how I'm playing things. Because this is actually, we are living in extraordinary times, really extraordinary times. Let's just have a look at actually quite a big week on a lot of things, to be honest with you. Tesla's got earnings coming out. Even Lockheed Martin is coming out with their earnings. We've got the Fed Tuesday. The Fed begins day 2 meeting, so everyone's going to be watching that. We've also got earnings coming out with Apple and Alphabet and Microsoft, even Visa, all coming out with their earnings. So that's what I'm saying. It's a very big week coming up here. So we've got earnings also from Boeing on Wednesday, Facebook, McDonald's, Norfolk, a lot of major brands, even Samsung is coming out with their earnings. However, again, on Wednesday, Fed statements, and again, 2:30, Fed Jerome Powell briefing. So all eyes are really going to be on the tapering stuff, right? Forget it. It's not going to happen. The Fed's just going to carry on printing. There is no tapering. And he'll probably mention tapering in passing. If he does, expect a bit of a shock wave going into the markets while they try and digest what Powell passing on tapering would mean. And then, we got Thursday earnings with Amazon coming up. Some real big brands. Again, MasterCard. I can't exaggerate how big next week is actually going to be going forward. And again, Friday earnings, Caterpillar, some really, really big names coming out. All right, and then to end off, we've obviously got the Fed governor coming out with whatever Jerome Powell had to say, I suppose, whether that affected the markets or not, to try and ease whatever effect that it might have happened, or they might just contradict, as usual, what Jerome Powell has to say. Okay, all right, so this is really what's lined up for next week. So how am I playing all of this? So let me speak to that now. Okay, so last week, U.S. Treasury Secretary Yellen urged Congress to act as soon as possible on the debt limit. Okay, so in other words, the U.S. will meet statutory limit on debts on the 1st of August. Treasury will suspend the sale of state and local government securities at noon on July the 30th. In other words, the bonds. So Treasury will need to start taking certain additional extraordinary measures to prevent a U.S. default if Congress does not act by August the 2nd. Okay, all right. If we have a look here, now Congress has got to either raise or suspend the debt limit. Now, this is going to heavily affect the bond market. And you've also got to remember that Joe Biden has to come up with $4 trillion US dollars coming out from somewhere. Now, if the Treasury stops selling their bonds, where else are they going to raise the capital for the $4 trillion US dollars? Obviously, they've got to try and get the money now from the Feds themselves in order to raise this 4 trillion. That is going to increase the debt size of things. So hence why I'm saying the debt limit is going to keep going higher itself. In fact, 4 trillion higher, or anywhere from 2 to 4 trillion higher. Now, this is a big problem because if we have a scroll down here, that the threat of failing to meet these obligations has caused detrimental impacts in the past, including sole credit rating downgrade in the history of the nation in 2011. That year, bond yields surged. That means liquidity was coming out of the bond market because the bond market was crashing. That money actually went into commodities. It actually went into gold. And if I can show you quickly, this is 2011. And it just shot up. So it was really on a massive, really nice run, but it just had that extra catalyst. And people were fleeing the safety of the bond market, and it went straight into the commodity section, particularly gold. Hence why you had this excellent rally shooting up here. You got to understand, the US has never defaulted in the history of its nation on its payments for the bonds, paying those bonds back to the public. Hence why bonds, the US, particularly the US Treasury bonds, has always been classed as a safe haven worldwide, simply because the US just doesn't default on paying back. Okay, and we're at that point again now where they've got to make that decision of increasing the debt limit or going to be suspending issuance of their bonds. So either one of those two scenarios is not really great for the reputation of the US. So hence why I'm seeing quite a huge catalyst from the bond market going into the commodity market itself. Hence why for a number of weeks I've been very bullish on gold, buying every single dip that's been happening, even though gold and commodities, particularly silver, has been suppressed itself. So hence why I've been positioning myself like that. And that's pretty much, you will start seeing this movement depending on what they're going to be doing there, but you will see movements flooding out from the debt market going into the commodity market. Okay, so again, a very scary factor. This is the debt crisis that the world is actually facing. This is going to go much higher. Okay, so that is going to affect the stock market, because the stock market is going to go much higher because there will be more printing. In fact, there's going to be 4 trillion being pumped into the debt side of things. That means the stock market is going to keep going up and up and up. You're going to see more and more and more record highs in terms of the S&P 500, the Dow Jones, and the NASDAQ. It's not over by a long shot. All right, so there are 3 major crises the world is facing. Now, I've addressed this in previous videos, particularly videos that I've done on uranium and hydrogen. But there are 3 crises right now that the world is facing. That's the pandemic, which the entire world was placed onto lockdown. This had a massive effect on the financial system. The second crisis that we're facing, which is the financial crisis. So that's the second point. So how do you play that section? Well, for me, that is going to be the commodity section, because I am betting against 2 things. I'm betting and I'm hedging. I'm hedging against inflation, but I'm also betting against this entire debt system. There's a part 2 on the financial crisis itself. So part B is going to be decentralized coins versus centralized coins. In other words, Bitcoin versus central bank digital currencies, your CBDCs. Of course, we've got Klaus from the World Economic Forum most likely congratulating him on kicking Bitcoin out of his country, because they want to control it all. The central banks want to control it all, and particularly being spearheaded by this particular gentleman from his institute, the World Economic Forum. And you're now facing a potential war between decentralized currencies versus centralized currencies at the end of the day, and it's the people versus them. And then we're going to touch on to the third point here, which humanity is facing, which is the environmental crisis. Central banks are key to countries' climate goals. This is where the other crisis that we're facing, and you would have noticed over the past few days, We've had in Africa, the Middle East and North Africa are parched. Just no rain, water. So I've got on the one half of the planet getting no water, parched land. And we got on the other side of the world pretty much Europe's floods. Germany was hit heavy. The UK has been hit. China has been hit. I think Belgium has been hit. I mean, it's been insane, the type of flooding that has been happening. So that's what I'm saying. On the one half of the world, they're getting droughts. On the other side of the world, they're getting extreme floods. So this is all going to be paying into that environmental narrative, going green and so forth. So they're going to be ramping up that type of rhetoric that's on its way. That's why if you have a look here and you understand the climate that we're in, you will understand where to position yourself in terms of this entire global market where you can protect your wealth. And ultimately what I'm doing and what I'm playing is certainly the energy market. I'm certainly playing the financial markets. I'm certainly playing the industrials and materials and also the technology. It's really these 5 sectors that I've been playing and how I've been positioning myself, but of course the commodity side and cryptocurrencies. So these are all the avenues that I'm playing. I'm not just sticking to one asset class and placing all my bets there. There's opportunities everywhere. You've just got to understand the climate that we're in, massive debt. So how are you going to play that? Well, commodities. Inflation, how do you play that? Commodities. You've got the central banks driving their totalitarianism, digital currencies that's coming our way. So how do you play that? Cryptocurrencies. Then you've got massive environmental crises. So how do you play that? So you're going to start looking at the energy sector. You're going to start looking at the financial sectors, particularly with the banks, because they're also heavily invested in the energy sectors. And that's how I'm particularly positioning myself and moving myself with regards to this. So there's going to be more printing. The debt ceiling is going to be raised higher, and it's going to be raised much higher. You're going to see NASDAQ and the S&P 500, the Dow Jones are going to go higher, much higher. We're just at the start. This is going to get completely crazy. So yeah, buckle up for that. Anyway, guys, that's my market recap. We got a very, very interesting week coming up. So pay attention. This week you got to pay attention to a lot of things. So yeah, this is Chris Trade. Be safe. Peace.